Welcome to the Friends of Van podcast. This week, we're going to be talking a little bit about gold news. It's up this week as expected from our last episode where we talked about how we went through a big run up in gold and silver because of the silver shortage that was taking place on the London Bullion Exchange. All that happened. We went through a correction period, and now we are having another small run up as we approach Thanksgiving. Anytime we have a holiday, we see a run up in the metals. People get paid on the 1st, they get paid on the 15th. There's a run up in metals before the holiday. And then the day traders and all the short holders, they will sell off and take their gains right before the holiday. And then we start the cycle back over again. And that's what we're seeing now. We've got a run up to the holiday coming, and gold is recovering quite a bit. We were hovering around $4,000 an ounce, and then today it opened at $4,135. It's currently sitting at $4,187, and that's the spot price. Premiums are going to go $100, $200 over that, depending on what kind of gold you're getting. The Gold Eagle is going to have the highest premium on it. But your gold bars and your 1 ounce gold bars, they're usually going to have like $100 premium over top of that. And as we know, premium is the price above spot. Spot is the melt value or the scrap value of the gold. And then the manufacturing cost and the cost of operations and overhead is above that. In other markets, that's called markup. So if you're at a restaurant or doing a retail store, operating a retail store, you would use the term markup. And it's the same thing. You've got a wholesale price for goods, and then you mark it up, 5, 10, 15%, depending on your industry. And we use the same thing in the metals market, but we call it a premium. And it's the same thing, just different terminology. Different coins have different premiums. A lot of people really like the gold maples because they have a lower premium on them. Those are the Canadian maple. They are 4 nines fine, and I think now they're even developing some that are 5 nines fine. So it's the purest 24 karat gold that you can get in the world right now. And the premium on those is going to be $75 to $100, whereas with your Gold Eagle, the American coin, it's going to be more around $145 to $175 for a premium. And some will be as high as $250 for a premium over spot. And that's how the coinage works. Today's news, we're looking at more federal rate cuts. This is typical this time of year. The Fed is always talking about rate cuts, and when they make a rate cut, then it weakens the short-term bonds holding and so forth. The long-term yields are different, but when they cut the rates, then the available money goes up, and then it helps gold, and people typically will buy more gold and silver and investments like that. So you'll see a tick up as these conversations with, the Federal Reserve and governments are talking about what they're going to be doing with their interest rates. And it gets very, very complicated, and most of it doesn't even matter. Everything comes in phases. Everything runs through cycles. We're just in these cycles right now. At the beginning of November, gold experienced a marginal decline. Like I said, we had a huge run up in October. I think October 25th is whenever it really hit super high. And then at the start of November, we had a big dip, which was expected, and now we're climbing back out of it. Another thing that happened this week that is going to affect gold prices is the government shutdown. It looks like we had some resolution to that, and that's good. I'm glad that the adults can go back to work. Interesting that nothing about the government actually shut down, except for the people that actually had to work. They got furloughed. So the people that were actually producing were the ones that got furloughed. But this is not a political show. This is a gold and silver show. But all of those things do have an effect. They do have an effect on the gold and silver markets and all markets. And now we have some resolution with that. So with the reopening, it could focus the attention back onto the Fed policy, which is what I'm seeing in the news now. Now they're talking about the Fed rates. So you'll see more attention being given to the financial sector instead of the shutdown, because it's probably going to open pretty easy. They're going to pass a budget, and they're going to get everybody paid, and in 2 weeks nobody will be talking about it again for another 4 years until someone decides to start kind of shutting down the government to make a point. I don't even know what it was all about. The central bank demand is still really high, and strong buying from central banks is happening, including China's People's Bank, the People's Bank of China. I don't know how you say it, China's People's Bank, something like that they call it. And they're still the big buyers in the market right now. America being the largest holder of gold and silver, China being second, and China definitely buying more gold than anybody else right now. Russia is in third place, buying 800 tons of gold so far this year. And then Poland is also 540 tons of gold and silver this year, as they try to back up their economies and their central banks with physical assets as more people move away from the dollar. Silver has been outperforming gold. Today it opened, I think, at $53 an ounce, and it's outshining the rise in gold and the recovery of gold today. The gold and silver ratio is what we're talking about. The ratio between gold and silver is usually 40-1 silver per ounce, roughly. And in the past year, with the run up in gold, we've been closer to 80-1 as a ratio with gold and silver. And those things, what's going to happen is the sentiment is that silver has more room to rise than gold. And so a lot of people are buying silver because there's going to be a better return on it. Looks like silver is going to 3x by next year. The experts are more conservative, saying it's going to be about $70 an ounce. I think it's going to 3x and be $150 an ounce, and then it might pull back to about $85 an ounce, is what I'm suspecting. That's my strategy for buying, is I'm going to be buying until it hits 150, and then I'm going to start selling until it's 185, and then I'm just going to hold. And hopefully I'll be increasing my silver holdings the entire time. And the reason why I'm making that play is because the gold and silver ratio is 80-1. So 3 different things can happen. Number one, gold could come back down and balance out that ratio of gold and silver. The other thing that could happen is silver could go up and meet that silver ratio. And then the third thing is it could be a combination of both. Gold comes down, silver comes up. That's more than likely what's going to happen. And I think that's why we're going to see the spike in silver next year up to $150, which will then back off to $85 an ounce, is my prediction for this same time next year. We'll see how that plays out. The analyst outlook is also looking very bullish still. JP Morgan is calling for $5,000 an ounce gold by next year. I think it's going to be up over $5,000 by this time next year, probably by summer of next year, if we stay in the same bullish trend, especially with the Federal Reserve being wishy-washy and raising and lowering rates rather. Another thing that happened this month is the mortgage rates went up. So our short-term bills, T-bills, the interest rate went down on, if I understand correctly. And then the long-term T-bills, which affect mortgages more, that actually went up. So mortgages went up, but loan money for short-term loans went down. So that's an interesting development for the end of this year. And if we keep seeing behavior like that, I think we're going to see gold over $5,000 an ounce next year, and probably by summertime. Ongoing inflation, that's not going to stop anytime soon. We still have wages that are very low, and so wages still have to catch up. Gold is catching up now. And once we start seeing wages rise, that's when we'll start seeing a little bit of a softening in the inflation. I think that since the pandemic, everything has just been going up and up and up, making up for the massive amounts of money that was dumped into the economy. And the last thing to rise, the last thing it always rises whenever we go through a period of inflation, are wages. And those we're starting to see come up now. Fast food restaurants are paying $18 to $21 an hour for starting wages. And you're seeing people work in those positions longer, getting $25 and some $30 an hour to stay in those positions. And their management is also, their management programs are ticking up, and all the people that are working in these entry-level jobs are getting raises And that's coming up as well, but it's only just started. So all next year, we're going to see some rising in the wage market, and that's going to help temper that inflation finally. Once we get to next year around this time, I think we'll see the slowing of inflation, and that's also going to help gold and silver balance out by next year. And these are just wild predictions. You know, these are just things I read a lot in the mornings. It changes by the minute. You never know when a war is going to break out. You never know when a company's going to crash or a bank is going to fail, and it's just going to change the dynamic of everything. But based on what I know right now and the feeling I get and what I see in the metals market, this is my long shot take for what is coming up next year. And it's loosely how I plan on buying things. So that's it for today in the metals market news. I am Mr. Van. Thank you for joining me at the Friends of Van podcast. I am Mr. Van. As always, this is not financial advice. And if you're getting your financial advice from YouTubers and social media, stop it. Go find a trusted fiduciary that can give you sound advice on the markets. This is just an opinion show, and it's a hobby for me. It's something I enjoy doing. If you like this show and you would like to see new episodes as they develop and as I develop as a host, then please like and subscribe. I do have some shows coming up where I'm going to be producing some interviews with other business entrepreneurs and experts in marketing and sales. So tune in, like and subscribe, click the little bell button. That way you get the notification as soon as a new video drops. Have a great week.